Good morning, Daily Hunters, and welcome back. It's Thursday, October 9th, 2025, and we've got a really interesting batch of AI-generated insights to kickstart your day.
Great to be here, Ethan. Looking at the data we crawled yesterday, there's quite a buzz out there. We've seen a lot of coasts across a wide array of companies, from established tech giants to some pretty speculative plays.
Absolutely. There are quite a few different stocks on people's minds, and while some show genuine growth potential, others are, shall we say, venturing into very risky territory. It's a real mixed bag today, but plenty to dig into.
All right, let's jump right in. First up, Palantir, symbol PLTR. The AI flagged a strongly bullish sentiment here, and for good reason. We saw a significant $36 million institutional buy, with chatter about its growing role in AI and government work. Revenue growth is a robust 48%, and the stock is trading near its 52-week high. This company, it just keeps demonstrating its upward momentum.
Upward momentum, yes, but at what cost, Ethan? This is their first time on our analysis, and while that 48% revenue growth is impressive, the valuation is simply astonishing. We're talking a price-to-earnings ratio of over 630 and a price-to-book ratio over 73. That tells me the market is pricing in perfection and then some. Plus, with a beta of 2.59, it's highly volatile. This is definitely speculative, but for those with a high-risk appetite and a strong belief in the AI story, our AI-generated insights categorize PLTR as a buy.
Fair enough on the valuation, Brooke, but let's move to a more established player, United Health Group, UNH. Our AI has flagged a strong bullish sentiment. Users are celebrating significant gains, with some even seeing their money double. Analysts are hiking price targets left and right, with Bernstein eyeing 433 and KeyBank at 400. This is a stalwart stock, showing signals of gains, solid revenue growth at nearly 13%, and a decent dividend yield. UNH has been a frequent buy or cautious buy in our recent analyses.
And for good reason, Ethan. It has solid fundamentals. However, we do need to acknowledge the debt-to-equity ratio of around 75, which is something to keep an eye on. Plus, there's news about them assessing valuation after a major Medicare Advantage exit, which could bring some shifts. But with those analyst targets and strong core financials, UNH is a buy for us today.
Speaking of strong financials, how about Costco, COST? User sentiment is bullish, and for good reason. They just reported an 8% increase in September sales, with online sales up a whopping 26. This led to a rapid price rebound. One user, even pointed out the stock's RSI was low, suggesting it was ready to get back on its horse. What do you think, Brooke? Our last analysis had Costco as a stay away.
Well, Ethan, this new sales data is a game changer. While the price-to-earnings ratio of 50 is still quite high, the strong revenue growth and impressive return on equity above 30% certainly provide a solid foundation. This new data definitely turns things around. For today, Costco gets an upgrade and is a buy.
Okay, now to the heart of the AI revolution, Nvidia, NVDA. The AI is showing mixed signals, some bullish, some looking for the next big thing. But when you look at the fundamentals, Brooke, they're just stellar. Revenue growth at 55%, net profit margin over 52%, return on equity over 109%. This is a motherfucking workhorse of the modern market, as one user put it. Strategic partnerships, visionary leadership, strong analyst backing. NVDA has been a bit of a roller coaster in our ratings, moving between stay away, cautious buy, and buy just recently.
Ethan, the fundamentals are undeniably strong, but you can't ignore the valuation here. A PE of 53 and a PB of 45 means a lot of future growth is already baked in. And that debt-to-equity ratio over 10 is still substantial. While it's a fantastic company, the market is already pricing in so much. Given its mixed history in our ratings and the high price point after such a run-up, we're calling NVDA a cautious buy.
let's switch gears to something a bit more, shall we say, volatile. Open Door Technologies, OPN. Our AI has detected a predominantly bearish sentiment today, though some users did see past speculative gains. One user, for instance, mentioned gambling earnings on it.
And that's exactly what it seems like, Ethan. This stock has consistently been a stay-away in our analyses for a reason. Negative net profit margin, negative EPS, and an astronomical debt-to-equity ratio over 340. Users are closing positions, and comments suggest the play on open is over. Despite some past speculative interest and FOMC minutes potentially aiding real estate, the fundamental financial health is just too weak. Open is a definitive stay-away.
Next up, Advanced Micro Devices, AMD. You know, AMD is a consistent top contender for hot leads. Our AI indicates overwhelmingly bullish sentiment from users, celebrating massive gains after its recent Super Saiyan run. The AI partnership has sparked huge excitement, with analysts even predicting another 35% climb. This one has been a frequent stay-away in our podcast analyses, but the recent buzz...
Ethan, I get the excitement. I really do. But let's keep our feet on the ground. AMD has repeatedly been a stay-away in our analyses for a reason. That PE ratio is an eye-watering 141. It's trading at its 52-week high after a massive pump. And let's not forget, the payday from the OpenAI deal isn't immediate. It ramps up in 2027. We're seeing negative operating margins and a debt-to-equity ratio over 6. The current price already reflects so much future growth. For new speculative money, AMD is still a stay-away.
All right, let's talk UPath, PATH. Our AI is seeing strong bullish user sentiment here, with lots of enthusiasm about its AI partnerships with big names like Nvidia and OpenAI, even ambitious price targets. This one has consistently generated significant buzz. Like AMD, PATH has been a stay-away for us in the past.
And it remains so today, Ethan. User enthusiasm, however infectious, cannot overcome these KPIs. We're looking at an absolutely extreme PE ratio over 500, razor-thin net profit margins of just 1.35%, and a high debt-to-equity ratio of 4.76. There are also comments pointing to substantial insider selling and uncorroborated news. The valuation is simply not justified by the underlying financials, making PATH a stay-away.
Finally, let's talk POET Technologies, POET. This one is on fire in terms of community buzz, seeing the highest hot leads count today. Our AI shows overwhelmingly bullish sentiment, with users YOLOing big money and talking interstellar gains after a $75 million investment for AI connectivity solutions. POET has been a stay-away for us, and sometimes even a speculative gamble.
Ethan, the YOLO crowd is definitely out in force, but it's critical to look under the hood. Our analysis continues to show deep unprofitability with negative EPS and an extremely high debt-to-equity ratio of nearly 15. The stock is at its 52-week high with a very high price-to-book ratio of almost 16 for a company that isn't making money. Despite that $75 million investment, which is a temporary boost, this is a fundamentally weak company being driven by pure speculation. POET is a stay-away.
Today's candidates for deeper analysis?
All right, Daily Hunters, it's time to consolidate our thoughts. We've sifted through a mountain of data, balancing growth potential with risk management. Here are some stocks we think you should take a deeper look at as potential buy candidates. Investigate as buy. Palantir Technologies, Inc., PLTR. United Health Group, Incorporated, UNH. Costco Wholesale Corporation, COST.
And for those with a higher risk tolerance, but still some strong underlying fundamentals, we have one candidate for cautious consideration.
Investigate as cautious buy. Nvidia Corporation, NVDA. Now, for the thrill seekers out there, we always pick one stock from our stay-away list that the community is particularly optimistic about succeeding despite significant risks. Today's speculative gamble, given the sheer volume of YOLO comments and sky-high hopes, is Investigate as speculative gamble, POET Technologies, Inc.
And that wraps up another episode of The Daily Hunt. Remember, this podcast is for informational and entertainment purposes only.
The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making any investment decisions.
The market is a wild place, and knowledge is your best asset. The data we present is compiled from publicly available sources to help you focus your own due diligence, but it could be outdated, so always verify.
Thanks for joining us today. We'll be back tomorrow morning with more insights to help you navigate the markets.
Happy hunting, everyone!